Good morning, everyone. Welcome to my roundup of the overnight events of the Reserve Bank of Australia. We did our preparation yesterday, and I'll take this opportunity just to run down what actually went on in the end. So the RBA left rates on hold overnight at 2.25%. The market, as we discussed yesterday, was pricing in a 56% chance of a 25 basis point cut. They ultimately didn't deliver on that cut, but still left the door open to further easing. Now, as we discussed yesterday, there is no Q&A with Glenn Stevens, the governor of the RBA, no press conference. So all they release is the interest rate decision and a statement. So just going through the statement very briefly, they cited essentially their concerns of many of the things that we discussed yesterday about growth being sub-trend, commodity prices declining quite sharply. Also, the unemployment being historically elevated, the Australian dollar declining noticeably in the last 6 months or so, but not having declined enough relative to commodity prices. And while the decline has been against the US dollar, against a basket of currencies, it's not as significant. Also, essentially in the statement, I think the most important thing, though, without going through every little bit in detail, is the very last paragraph, where they say, at today's meeting, the board judged that having eased monetary policy at the previous meeting, it was appropriate to hold interest rates steady for the time being. Further easing of policy may be appropriate over the period ahead in order to foster sustainable growth in demand and inflation consistent with target. The board will further assess the case for such action at forthcoming meetings. So while we had the statement mention quite a few things, ultimately that last paragraph is key. They haven't cut rates this time around, but the door has been left open for them to do so. They're very much in wait and see mode. Indicates maybe a degree of data dependency, maybe indicates that they want to see the effects, if any, of the last interest rate cut, which was last month. So nothing done this time round, but scope to cut further in the future. And I think that is ultimately key, and that is the main takeaway from the statement, because essentially they've repeated their concerns of the previous meeting in the statement, but ultimately this is the key takeaway. So how did the market take this? As we saw yesterday, the market was pricing a 56% chance of a cut in March. Now they are essentially pricing a 56% chance of a cut in April, as we can see from here. We're pricing a 2.11% yield. This is from OAS data. So essentially they've just shifted expectations down one. Now, previously, before the meeting yesterday, the market was pricing in one cut fully priced by April. Now, as we can see from here, the May 2015 OAS is at 1.99%. So essentially that's been shifted one meeting later as well. So where it was one cut fully priced by April, it's now one cut fully priced by May. So essentially over the next two meetings, the market still expects one rate cut. In terms of the end game for the RBA, the market is still pricing two rate cuts this year. Pre-meeting, the two rate cuts were fully priced by August, and now they're fully priced by October, as we can see, having a cash rate of 1.75% by the October meeting. So essentially what's happened is expectations have just been pushed back. Although they didn't cut rates, the market is still expecting the rate cuts to come. That's expecting the same degree of rate cuts, the same pace of rate cuts, just starting that little bit later. Which essentially was reflected in how the market ultimately reacted. So this market pricing is from short-term interest rate markets. These are OAS numbers. The futures would imply exactly the same thing, the interest rate futures, that is. So if we look at how some of the markets reacted, the Aussie dollar spot FX rate We talked yesterday about the market being coiled in this 77 to 79 cent range over the last month and a bit, essentially since the last RBA meeting. And I drew this trend line of this downward sloping trend line, which I thought could be quite significant if we popped above this 79 cent level. We didn't do, and we're still pretty coiled up in this relatively tight range. Now this is a daily chart here. If we just go to the 1 minute, we can see that the knee-jerk reaction to the rate decision, if I just scroll this up a little bit, so what happened? Okay, so at 3:30 a.m. London time, 2:30 p.m. in Australia, we got the no change in rates. Aussie dollar essentially started off at the 77.70 sort of level, spiked up in the next 2 minutes up to 78.36, retraced back slightly, and then just ground higher over the rest of the session. Now this knee-jerk reaction was obviously on the no rate cut. But once the statement got read and absorbed, essentially the market took it that, okay, we're not hiking and we're not cutting rates this time around, but future meetings will still very much be live, and expectations of rate cuts essentially are still there. So we did get an up move in the Aussie dollar on the note rate cut, but probably not the follow through that 79 cent level that I was looking for, just because they left the door open for further cuts in the future. So in terms of trading going forward, I still will look at that trend line on the dailies for a break above 79 cents to initiate longs, and still use the 76.20 level as my support. Now in bond space, the market reaction in 10-year bond yields was pretty muted, to be honest. We didn't really react too much at all. Initially on the no cut, the market jumped up 3 to 4 basis points and then retraced very quickly. And I talked about the 10-year spread to US potentially widening on a no rate cut scenario, but this didn't actually happen in the end, just simply due to the fact that they did keep the door open to further rate cuts. So the green line ultimately reflects the 10-year Aussie bond yields. The purple line, 10-year US yields. I know it looks a bit fractured and fragmented on this chart because it's a 1 minute. But you can see here we went from 2.51% 10-year yields up to 2.55, extended a bit further, chopped around, and then came back down a bit. And if we look at what US yields have done, the spread actually seems to have narrowed further, if anything, since the actual decision. So we didn't get that unwind of that spread tightening of Aussie 10-year versus US, but that's pretty much because they've left the door open for future rate cuts. If they didn't do that, I would have expected a bit of an unwind of that trade, which we talked about yesterday, and I'll just bring up that chart. We were at 50 points yesterday, spread to US 10-year. We're down at 46 basis points now, partly because the US bond market sold off yesterday, and it has continued to do so overnight, and the Aussie has been lagging, as we've shown and discussed yesterday. I do expect this to widen back over time, but ultimately if the RBA don't follow through or deliver the rate cuts that the market is expecting. Now, just in contrast to that, I just want to get the 3-year bond future up, the 3-year bond yields, because although the 10-year didn't move that much, the shorter end of the curve did. So here at 3:30 London time, 3-year bond yields went from 181 up to 189, so 8 to 9 basis points. Again, like the 10-year, it chopped around for a bit, but it hasn't really come back off that significantly. So ultimately what we've seen on this no rate cut is a flattening of the Aussie yield curve. And again, that's something we'd probably expect given front-end rates are more sensitive to interest rate policy than the longer end of the curve. Aussie equities, we've seen on the daily charts they've been quite bullish for quite some time, ever since the end of January when the talk of rate cuts came about. The Aussie ASX 200 indices has been very bullish. We've seen lots of upward sloping candles, very much a bullish trend. It picked up pace early Feb after the rate cut was delivered. Now, looking at this chart in isolation on the daily, yes, we've seen a slight retracement, but nothing overly significant. If we look at the 1 minute chart, we can see here we got this spike down on the no rate cut decision, and then again, similar to the Aussie dollar, once it was absorbed, once the statement was read, we got a little bit of a retracement back, and if anything, we've retraced about 2/3 of the down move already in the ASX 200. So equities do seem to be continuing their bullish trend despite this, I guess, this downward blip on the no rate cut. But again, why has it done this? The market, equity markets, like low rates. The RBA hasn't delivered on it, but they've kept the door open, and ultimately that's why we didn't see a shank, a full-blown shank in the equity markets. And I think it will just be a case of watch this space for the equities, and Europe continues to be pretty bullish in equity space. So it could just piggyback on the back of that. Okay. And yesterday we also talked about how we can trade some other markets on the back of the Aussie. Now, the bond markets, global bond markets, didn't really do too much on the back of it as maybe I expected. In the past, it had been piggybacking on other interest rate markets, rate cuts or no rate cuts. But as I said yesterday, the market had become a little bit attuned to that, and the opportunities had disappeared. But I mentioned maybe there'd be an opportunity in equity space, and what we have seen actually is that other equity indices did drop in conjunction with the ASX 200 on the no cut decision. Ultimately, there's no additional stimulus. Equity markets like having this stimulus, like having this low yield environment. So we actually saw the S&P drop a few handles on the rate decision. Euro stocks and FTSE open slightly weaker. Could be attributed to something else, but it also could be attributed to the no additional stimulus in Australia. So to sum up, guys, unchanged from the RBA today. Door is still open for future rate cuts next month, the month after. So very much the next few meetings are live, and we will have interest, we will have opportunity, we will be looking at them, and the market, Aussie market, will be very much data dependent, looking for economic updates, economic figures, also looking for some of the key things the RBA have mentioned: commodity prices, the Aussie dollar, the housing market, which they flagged as being a bit of a concern because it's so strong at the moment, and also GDP, which is out later this week. So very much still in play, the RBA, but nothing this time around. So good luck for the rest of the day, guys. If you've got any further questions, those at Futex can just Skype me, and those following on Twitter can get in touch with me on my Twitter handle, IMI_Futexlive. Thanks very much.